All right, here we go. We are live, baby. Boom. We're here. Friday. Let me tweet this out. Let people know that we are live. Market open officially live. It is Friday, November 18th. It's Friday. It's a long week, but we got through it, and we're here, baby. Market freaking open. Alvarado, what's up? Gabe, what's up? Seth, what's up? Hello. How is everybody? Let me put this in my Discord right now. I'm also going to pin my Discord in the chat. How do I do this? Settings. I'm so bad at doing this. Let me just get an invite link real quick, and then we'll do that. Quarantine watching you in the dentist room before the real pain begins. I love it. Ken Bailey, UCUS, Alvarado, -15 degrees. My goodness. Amit, thank you for the live stream. Castring, Nicola, Aha, Tony, Nicholas, Uriel, Lloyd, Tony. Thank you all for being here. It means the absolute world for me that you're spending your morning with me. Your mornings are very sacred. Obviously, mornings are the time of the day where people get the day going. It means the world that you're spending it with me. Comment on DNA. I will talk about Ginkgo Bioworks in a second. Kathy Wood bought another 4 million shares, so she is still very bullish. I took a walk today. It was about 29 degrees where I live in New Jersey, very cold, but -15 is a hell of a day as well. Felicia, hello. Hi. Hello. Thank you all for being here. Okay, let me copy this link. Here we go. Okay, copy link. I'm going to put it in the chat real quick. So Elon Musk is shutting down Twitter, which is absolutely insane. It is he's not shutting down Twitter, but let's get into the story. There's a lot to talk about. Not everyone here is from the USA. Yes, that is true. A lot of people are not from the USA. A lot of you might probably not even be using Fahrenheit, which is it's Celsius. I've just never been able to use it before. I always get confused when people use it, but I understand. Let's pin this message right now. Pinned message. What a great day. It's so much fun on Twitter right now. Yes. Okay, so let's talk about Twitter. What is going on Twitter? Let me share the screen as well. What happened last night is Elon Musk sent a message, okay? A message to employees saying, look, we are embracing a 24/7 work culture. And that doesn't mean literally working 24/7, but obviously it means you're going to be working more. If you cannot get on with this culture, get the fudge out is basically what he said. You'll get 3 months of severance and you can leave. And apparently 75% of the 3,700 staff that was left decided to say, no, we're not opting into this because they don't want to be part of that culture. And as a result of this, a lot of people have apparently quit Twitter, which is letting people to realize, hey, is Twitter even going to survive as a company? Is it going to be able to keep it going? Elon Musk tweeted this meme, as you can see. This is absolutely insane. There's a reply. He replied to AOC, of course. We know he has a little love-hate relationship with AOC. So first of all, he said record numbers of users are logging onto Twitter to see if Twitter is dead, ironically making it more alive than ever. All of the media attention, me talking about Twitter right now, is what's leading to first-time users getting onto the platform, using it, understanding it, and spending their attention. And attention is the biggest asset in this economy. It is going to be the biggest asset for the next couple of decades to come. And Elon is centralizing all of it on Twitter. AOC says, shout out to all the workers at Twitter. You built a vital place for connection and deserve so much better. Millions of people appreciate the space you built and the hard work that went into it. Thank you. Elon says, you're welcome. Come on, bro. What on Netflix is more entertaining than this? Tell me, what on Netflix is more entertaining than this? This is hilarious, bro. Elon's like, yeah, you're welcome. I've been doing a good job. Obviously, she wasn't talking to Elon because she doesn't like Elon. But so we debated this on the Daily Cowbell today. By the way, thank you all for watching and subscribing to the last show. Yesterday got 7,000 views, which is a big milestone for us. So really appreciate everyone who's shown support to the Daily Cowbell. We debated it today, and I kind of had a take that was like, I don't know if Elon's doing this the right way, but at the end, I do think he will be successful. It's just the culture he's pushing. Look, it's contingent upon one thing as I open up Webull and let's get into the market. If people are inspired by this free speech culture that he says he wants to enact in Twitter, that's why he paid $44 billion for it. In reality, he got forced to do it by the judge, but that was the idea, right? Like, I'm paying $44 billion to save humanity. My argument is Tesla and SpaceX is a way bigger mission. It's a way bigger mission. And the reason engineers are quitting is because no one gives that much of a F about Twitter and about this free speech dialogue thing, even though it matters, like morally it matters. But more like the reason you're going to work 24/7 at Tesla and SpaceX is because it's Tesla and SpaceX. It's climate change, space colonization. It's not memes on Twitter or free speech. So I think he's going to have a little bit of a problem in terms of getting people to like care about the mission. But at the end of the day, he's probably still going to be able to, inspire enough people to work for him because he is Elon Musk. Morning, brother. Amid shocked face. Yes, it was my shocked face. I haven't used it in a while. Amid, have you seen the 10-year and the 2-year yield curve is the most it's been inverted? The spread is growing, not closing. That's very bad. I did see that analysis yesterday. And that only proves the bearish argument that Gabe has been going for. For those that don't know, GS Strategies, Gabe, a friend of the channel. I will be doing late night stock talks with him bi-weekly on his channel, so we'll let you guys know when that drops. He is bearish on the market. He has about $250,000 short the market. So when you see him in the chat, he is going to be pointing out analysis that brings to light why he's short the market and why he thinks this market is going to crash. Oh, here's an interesting stat for you. Also, first of all, no one reminded me about the word of the day. It's been 5 minutes, 54 seconds. I said, hey, we're doing a word of the day segment. No one reminded me about the word of the day. The word of the day today is a word that I'm going to look up because I didn't prepare a word. Okay, here's the word. Farce. See? Oh, Merriam-Webster has a word of the day. Boom. So Merriam-Webster might help us out. A farce is a ridiculous act, proceeding, or situation. Farce can also refer to a light, dramatic work marked by satirical comedy. What Elon Musk is doing with Twitter is a farce, but it may end up being amazing at the end. So here's an interesting stat for you guys, okay? You guys ready for this? Between 2000 and 2002, the NASDAQ had 14 days where they were up 6% or more. Now, 6% on the NASDAQ is not, Facebook is up 6%. We're talking about like thousands of points higher because the NASDAQ is obviously a very big index. So when you move 6% on a NASDAQ, you have a lot of movement. 14 days, 6% up or more. If you thought the bottom was over on each of those days that were 6% up or more between the 14 days in 2000, 2002, you would have been wrong all 14 times. So the idea that we're having these rallies here and there and that the market is benefiting from it and that, we're having up days, it might not be the case going into 2023. It might just not. It might just not. Hi, Amit, what do you think one should invest in Tesla stocks right now at current price? So I am waiting to buy the dip on Tesla. I bought a couple of shares at 184. Let's go to Tesla right now. Let's see if it's pre-market. Tesla 183, 185 pre-market. Look, I think if you believe in the long-term story of Tesla, this is probably the best stock that can 4x over the next 6-7 years. Would I recommend buying it now? That's totally contingent upon your risk tolerance. I do think if 2023 is bad, there's a lot more pain to come, and we could get Tesla maybe at 150, 140. That's very possible. But if you're long-term on it, then yeah, DCAing is not a bad idea either. I've already DCA'd into Tesla. My average is 220, about 7.5 shares. Want to build it up to a $5,000 position, waiting to get in, but I do think there's a bit more pain to come. So that's my basic analysis on if I would invest in Tesla. Just missed the start. What sandwich did Amit have today? Did not have a sandwich. I did have this thing from Dunkin' Donuts. I did go back there again today. It's like it's a nice date time when you get to go in the morning. I woke up at 5:30 today, so it's nice when the world is sleeping, you get to go to Dunkin'. For those who are not from America, well, Dunkin' Donuts is international, so people should know Dunkin'. It's this like white cheese and cheddar roll, toasted. It's always nice with a caramel latte. That's the best breakfast to have. Good morning, Jason. Thank you for being here. Yes, there's no way to tell a bear market rally from the bottom, and those who aren't smart and patient don't try to time it and stay invested. That's literally the only way to consistently make money. I agree. That is true. Here's a good fact. Facebook users in India 329 million versus only 24 million active users on Twitter. Wow. Raksha, that's a great stat. Let's go to Meta, by the way. That's a very good stat. Twitter does not have the same by the way, Meta up 2% pre-market. Twitter does not have the same user base. India is a big untapped market. Twitter could be huge. So I wonder why Twitter's more big or less big in India versus Facebook. I mean, obviously Facebook is the giant. I get it, but it has to be something around friends and family that Facebook creates that Twitter doesn't. And I know that's a generic Facebook argument, but in India's a big market. Like YouTube is India's biggest user base. YouTube's biggest user base is in India. So, that's true. Hey, Amit, not trying to call you out at all, but honest question, are you green on any of your trade investments? I am down for the year. So, I only have a couple stocks, right? Palantir is the big one I'm down on. I bought Google, traded out of that, made a couple bucks on that. Nothing too crazy. Tesla, I'm down like $30, $40, whatever it is. So in terms of pure investments, no, there's nothing that's super green, but it's because the only couple investments are Palantir, Tesla, and SoFi. And SoFi, I'm down like $30. So That's it. Ginkgo, I sold out of at 292, and I said that a lot of weeks ago. We'll talk about it today. Cathie Wood bought 4 million shares of the company, even though they did a $100 million share offering and their earnings weren't amazing. I'm a buyer of Ginkgo under $2, because at this point, that's not the actual Ginkgo, where it's probably going to be going under there. So that's likely where I see it at. It's at 2.2 right now. Probably can go down to 190, 180 if the macro gets really bad. And that's when we're going to see. All right. It is 11/18, 2022, 9:30 a.m. Friday. Thank goodness it's Friday. Here we go. The stock market in the United States of America is open. Wake your ass up. The stock market is officially open. We are going to be analyzing stonks because that's what we do. Meta down just a little bit, 0.21% now at $111. Tesla 183, down below 184. Amazon 95, Google 98. Schwab dividend ETF 77, pretty stable. Tattooed Chef down another 3% today. Well, the chef is not cooking right now. Apple 151, up 0.75%. S&P for some reason continuing to rally. The S&P just finds a way to continue to rally, and that's how it is. Chris says, no, you're not going to do it. Chris, you don't get DNA yet. I still am very bullish about Ginkgo. I mean, it's very obvious. Ginkgo is very obvious the play they're going for, but you got to just give it some time. Also, speaking on the $100 million share offering, look, it's not nice to shareholders when you dilute them by 100 million, but Cathie buying 4 million shares after that came out means that she knows they're playing the long game. And she really believes in their thesis long-term. And if you understand Ginkgo and synthetic biology, you understand they basically have a monopoly and no competitor in their space. AMRS is not the competitor. Then there's a bull case for Ginkgo. I think it should be less than 5% of the portfolio. Obviously, you shouldn't bet the farm on it. But I'm waiting for a better entry point because the conviction on Ginkgo is pretty high. Sam, thank you so much for being here. Good morning. Good morning. Wake your ass up. Yes, Amit, I saw Wejo may be merging with Ontonomo. Wejo postponed the Q3 bit. Really? I didn't hear about that. They're merging. You mean they're getting acquired, or they're acquiring them, or it's becoming one company? I didn't. Can you send a link to that, Nils, in the chat? I didn't know that at all. That's very interesting. She'll sell next week. If Cathie sells out of Ginkgo Bioworks, which now she has over like 120 million shares of 110 million shares, I mean, that is when I genuinely, I think it would be a hard time to ever believe Cathie again, because the things that she sold out of, it's like, look, all right, I get it, Spotify, Palantir, whatever. This is a stock that is trading at all-time bottoms, and she's buying more, aggressively buying more. Like she's been buying close to 20 million shares while it was trading from 220 to 350. That's the range over the past 2 months. So I think they just think they caught the bottom, and they really believe in the Tesla of genomics bull case on Ginkgo. There's no other company I would bet on that to do that. So, I don't think they're going to sell out of it, but let's see. I mean, let's ultimately see what happens. Enphase, of course, is up at 314 because Enphase never goes down. Vitali told me to get Enphase at 140. We were sitting in the back of a cheesecake factory in his Tesla. It was March 2022. And he's like, have you heard of Enphase? I was like, no. He was like, this is the bull case. They make the microinverter. Buy the fucking stock. I was like, Vitali, it's solar panel. He's like, it's not solar. I was like, Vitali, we were in his Tesla. He let me drive his Tesla for the first time. It was the first time I drove my Tesla. He was like, this is solar. This is the future. Buy Enphase. I was like, no. I could have doubled in a couple of months if I just listened to his advice. So, but also he bought Meta. So maybe it's good that I don't always listen to his advice. Okay, there we go. She rode Berkeley Lights to death. That's a good point, Chris. That is a good point. She did ride Berkeley Lights to death. So that is a good counter argument to my point. If Ginkgo ends up like that, she could ultimately be wrong. Gabe says it will rally to 403 or so. Dumb money is buying on this hopium. That I actually agree with that. I do think there is some dumb money buying on this hopium. Like, I think if you're buying the S&P right now at 397, I don't know, man. I don't want to say it's dumb, like as in you're a dumb person. It just feels oddly peculiar. That should be the word of the day. It feels like a farce. It's a ridiculous event. For those who are new here, the word of the day is farce. So make sure you use farce somehow today. And on one of my videos, comment how you use the word farce today. It has to be in some way. It seems like a farce to be buying the S&P on this dip. It absolutely seems like a farce. Elon shutting down Twitter. Okay, yeah. So if you are new to the chat, let's go into that. Basically, the whole idea is Elon wants to do Twitter 2.0. And as you can see right here, right, RIP Twitter is trending on Twitter. And the idea is he wants to create a work culture. Now, I saw a really good stat today as well, that the head count for Twitter was about 200,000 per person per year. If you get rid of like 80% of the staff, Twitter's expenditures are going to decrease massively. As you can see, RIP Twitter trending right here. Twitter has also been reported to hire a new CEO. Elon Musk has said he's probably going to get someone new to run this place within the next couple of weeks. Ex-Twitter employees pitching investors the next Twitter, rip Twitter, literally just Twitter without Elon. There's a lot of Twitter Elon hate, but it's driving a lot of usage. It's kind of like Trump, right? When Trump was on Twitter, he said some wild stuff, and guess what? You had to be on Twitter to use Twitter. And that led to a lot of usage on Twitter. That's not happening anymore, right? And so I think in some world, Elon is becoming what Trump was for Twitter, and it might be working. And it might, like, at the end of the day, I know this because I run a startup, link in the description. If you guys want to check it out, sign up. Feedback. Getting people to just sign up and use something in the first place is really difficult. So if you get their attention and get them to sign up, you might be able to get them to use the product. It just takes time to ultimately get there at the end of the day. ARK still overvalued. If you look at the numbers and the chart, that is also correct. Why is the sound clipping? Swap to another video and no clipping there. If you're talking about the crackling, that's because this channel has a crackling problem, but I'm fixing my CPU this weekend, so we should hopefully fix it. It's a farce to not start buying Tesla for the long term at these prices. That could be an argument as well. Look, I'm not gonna argue with that. All right, let's get into the market. So investors should consider the market rally as a year-end gift. Let's hear some bull case for the market. Here we go. All right.
We've been talking about, I don't know if it's been a head fake. I mean, it seems like it's been a head fake for me, or not for me, but it seems like it's been a head fake for the equity markets. You have all these sort of cross currents of news over the past 2 weeks, and you heard Roger Ferguson in the last hour. He says, look, the Fed's doing what it's going to do, and we've said that the whole time, and yet the equity market doesn't seem to want to believe it. What do you think?
Well, I think, first of all, it's nice to have seen some stability most recently in the equity markets. I mean, we've chopped around here around these levels, and we've been able to hold on to this 10% rally. And what I think is, I think we can still build upon the rally that we've had and push higher into year end, because to your point, the markets are starting to believe the Fed. And I think this next phase of Fed policy, which is still continuing to hike, getting to 5%, but getting that there at the slower pace, I think that's pretty well digested by the markets. And look, inflation is coming down. We have more and more signs of it. And, we're not going to call for peak inflation because we've done that over and over again and have been wrong. But that inflation print, that doesn't actually change Fed policy. What Fed really wants to see now is the labor market to start to show signs of weakness. And if it does, then what I think the markets will start to sniff out is the end of the tightening cycle. So again, the reason I think we can digest Fed policy and push higher is because it is priced in. The Fed fund futures are pricing in 5% by sometime next year. And if labor market weakness actually appears, then we'll start to jump to conclusions that we might be finally nearing the end of this tightening cycle.
So, from here on out through the end of the year, which is sort of a short-term thing to even say, given that we have less than a month and a half to go. But if we had this conversation about what it looks like a year from now, what do you think the opportunity is for the market?
So first of all, near term, I think if we do continue to build on this rally, I would sort of think about it as a year-end gift to investors, one that you probably want to cash in and not hold on to. And what do I mean by that? Near term, you want to be selling the rallies as we get towards 4,000, 4,100. I still think that's the near-term resistance level. So you want to sell things that probably are not going to work well even a year from now. And the things that I would put into that category are some of the broken leaders. Maybe it's some of the big tech names, which, as you know, they've not kept pace with the market. Maybe it's some of the unprofitable tech companies that relied heavily on valuation expansion. A year from now, even if the Fed starts to ease a little bit, it's off of 5% or higher than that. So again, I don't think it's going to be an environment of massive multiple expansion going forward. The things you want to buy, especially as the S&P dips, let's say to 3,600, you want to buy things that can compete with a cash yield that's 4 or 5%. And to me, those are dividend-paying stocks, some of which are paying dividends of 4%. I would have put energy in that category. So I think you want to have this portfolio of dividend payers and maybe do barbell that with some of the tech companies that do have cash flows and they're not pandemic plays and they're not.
Okay, so she's making a pretty interesting point there around if you're going to get into buying the dip on some of these stocks. One of the arguments she's saying is that you have to buy something that you think can compete with a 4 to 5% gain. Why is this important? Because we've got 2-year, 10-year treasury bonds giving you upwards of 4%. You've got corporate debt bonds giving you upwards of 4 and 5%. Thank you to Chris for that. He informed me of that. And as a result of that, you've got if you're going to buy a tech stock or something like that, and then you've got the general market index, right? That potentially might do that. So if you're going to buy individual stocks, which is why some of these growth names are like a tattoo chef, right? Very speculative right now, because if bonds are giving you 4 or 5%, I mean, if Robinhood, for goodness sake, my Robinhood is giving me 3.75% on uninvested cash. I've got a decent amount of uninvested cash that's in there that's getting like close to a 4% just for being there, because I kind of just don't want to put it into the market right now. Man, like that's what we're competing with. And so one of the things I've been learning as I've been getting older as an investor, and the reason I'm saying this is because some of you that watch the channel, you guys know I have not made hundreds of millions off the market. I have not even made hundreds of thousands off the market. And I think part of the reason you guys watch this channel is because not because I'm a financial expert, but because I'm learning it just like everyone else is learning it. And that hopefully makes it a little bit more relatable. What I'm learning is that if the S&P on average gives you 7 to 8%, and obviously this year we're going to probably be down upwards of 10%. We'll see how the Santa rally goes out. Then if you're trying to beat the market, this is why people like Peter Lynch are held in such high regard, right? This is why Warren Buffett is held, because if these people are getting 25% CAGR, they're beating the market by a factor of 400%. So if bonds can give you half of what the S&P can give you, which is the general market, without any risk, if you're a millionaire, if you're someone who has like $100 million to invest and you want zero risk, you put 100 million and you get 4% on that every year. I mean, like, that's a hell of a way to just like passive income. That's an amazing way to get passive income. So if you're going to bet on individual stocks, which, I want to build a career as an investor, picking the right stocks, which means doing the right due diligence. Obviously, I want to become a better investor, just like all of us, and not just invest in the index. That's the hurdle you're fighting. Can you beat that 4 to 5%? Can you even beat 8 to 10%? And I don't think I'm at that level yet, but I'm trying to learn just like I know everyone else is. And that's the reality with facing stocks. And this year has been very humbling to learn that, like, markets go down and you might, and sometimes bonds that give you 4 to 5%, they might be the best option in a crappy market. Tesla at 181, it is down below where I DCA'd at this week. Let's see if it gets into the 170s again. That would be a little bit nice to see in terms of another DCA. S&P down a little bit at 396. Target recovering a little bit to 161. It was down in the 149 range, so it's recovered a little bit, but still down. CrowdStrike 141. AMD, look, I've been doing a lot more research on AMD. Ticker symbol U did a fantastic video on AMD versus NVIDIA. I asked people on Twitter, hey, is it AMD? Is it NVIDIA? A lot of people said AMD. I'm getting more excited about AMD. I do not know enough yet to be able to initiate a position, but I am learning a lot more about it. And that may be the next stock that I look into more deeply. Netflix at 295, Roku at 56, ARK at 37. Let's see what's going on in the comments. Why invest in Snowflake when you can have Palantir? Yeah, I agree. I don't like thinking about buying the dip. I just DC every week. And that's a perfect way to do it as well. Whoa, shout out to 302 people here. I just looked at the list. There's 300 people here. Thank you so much for being here. It means the absolute world to me. I just looked up and I saw it. That's great. Wejo delayed their ER results. Okay. Interested. So we'll go a little bit more into Wejo. Do you think Kathy will have the reverse Midas touch on the company ATI ticker? Has she bought it yet? I don't know if she's bought it. This is a life sciences company. So I know Sachin, who's a friend of the channel, has talked about this company for a while. I have not dug deep into it. It's obviously down, looks like close to 90% for the year. I don't even know if Kathy bought it. Let me know and confirm if Kathy bought it. I was going through all of the funds yesterday to look at some of the stocks she's been buying, which we should do an update on that. We should see what's in the fund, but we can go through that. Look, she might have that touch, might not. I honestly think a lot of the Kathy stocks, it's going to take time. It's going to take another 2 years to see if she was right or wrong. She has promised 25 to 40% CAGR. At one point it was 25, now it's 40%. I don't know when that CAGR is going to come, but if she's right, then we're all going to look like idiots because we didn't invest in ARK. So, I mean, it's going to take time to see if she's right. Now, one stock I want to talk about really quickly is Spotify. Spotify announced an exclusive deal yesterday with Emma Chamberlain. Okay, so let's talk about this a little bit. This is going to relate to a lot of different elements when it comes to the market. Spotify, Audio King, announced a deal with Emma Chamberlain. For those that don't know Emma Chamberlain, let me share my screen real quick. This is a YouTuber who is 21 years old, okay? Just 21, the tender age of 21. Such a ripe, beautiful age. I'm saying this as a 25-year-old. I remember when I was 21 and I fell in love. We don't talk anymore, but nonetheless, 21 is a beautiful age. Emma Chamberlain, here we go. 11.9 million subscribers, okay? Only 21 years old. She has 12 million people that care about her. Look at the views on these videos. Absolutely insane how she has captured attention. Spotify's given her an exclusive contract. Now, why is this the worst thing in the world for Spotify stock? Because that is my thesis. And I would love to have any contrary comments in the description. Why is that going to make this stock, to me, a laughing stock, to be honest? Now, I am still bullish Spotify long-term. I think long-term they win. I think long-term the stock appreciates. I do not think the stock at $79 will be $79 in 5 years. I think it will likely be upwards of $300. So long-term, I think Spotify is in a good position with their stock price. However, that will be contingent on the macro. You cannot keep spending hundreds of millions of dollars to acquire these exclusive influencers to drive people to your platform and then say that you were a creator-based platform. That is incorrect. This is why I'm not bullish on Netflix. Think about YouTube. YouTube didn't ask Emma Chamberlain to upload her videos. She uploaded her videos. And if she doesn't upload, YouTube doesn't give a shit because they have millions of other videos. The problem with Spotify is that if you're getting these exclusive podcasters onto your platform, what happens when they leave? What happens when they don't want to keep producing content? More importantly, what happens to your gross margins when you have to spend $1 billion, which they've spent upwards of since 2017, acquiring Joe Rogan, Caller Daddy, Gimlet Media, etc., on exclusive content, and you don't have the user base that's coming back religiously for Spotify. They're coming back for the exclusive content. This is the problem with Netflix. So my hypothesis here, now people will say, oh, well, Emma Chamberlain uploaded to YouTube because that's the biggest platform in the world. Why do you think it's the biggest platform in the world? Because 322 people right now found me, a random kid from New Jersey, talking in my bedroom in my parents' house about the market randomly. I didn't pay to get any of you people to find me. I popped up on your feed. That is the thesis for why Google is good, for why TikTok is good, for why Instagram and Facebook are good. It is the content discovery thesis. And if you're a content creator or you care about content, you have to understand this thesis. The problem with paying exclusively is that that thesis doesn't shake out. Spotify, I think, would have hundreds of millions of more users if anyone could get discovered on the platform. That's why YouTube has literally hundreds of millions of people uploading every day. 500 hours of video uploaded a minute. I'll stop this rant in a second. But my point is, look, I'm happy for Emma Chamberlain, happy she got her bag, but it's reasons like this why I cannot buy this stock. How many more people are you going to buy and then make exclusive and then tell to shareholders, oh, you got to give us time. It's going to scale. In the next 10 years, you're not going to stop buying influencers because that's the whole reason you've gotten users in the first place. The only way you change this is if random people like Amit get discovered on Spotify. And if I'm not getting discovered on Spotify because Emma Chamberlain and Joe Rogan and Caller Daddy and Gimlet Media are all in the feed, then I'm not going to be a Spotify creator. So at the end of the day, I think there's a massive market opportunity to honestly disrupt audio because I think these platforms that are doing exclusive audio, they don't get it. They do not get it. That's not the way for content to get discovered. It's just not. And if you don't care about Emma Chamberlain, what else is there on Spotify that's going to interest you that shows up in your feed? That is the fundamental question. So that's my rant on Spotify. I still think the stock will do well. It'll appreciate, but it's the same Netflix. It's why I can't buy the stock. Whenever I think of buying Netflix, I'm like, wait a second. Google has 500 hours of video uploaded per minute. Why the hell would I buy Netflix to maybe get another Squid Game, which seems like it happens once every 5 years because content is really hard to get right. It's just as that's the thesis. At the end of the day, that's the thesis. LOL, he is passionate. I did get a little passion there. Amit, calm down, bro. You're going to give yourself a heart attack online. No coffee for you, Amit. Yep. No coffee for me. Okay. Let's get into CNBC. Let me give myself a little bit of a breathing break. Let's see what else the talking heads are speaking about. Here we go. So on this one, we are going to listen to the Fed. Oh, wow. This is amazing. The first clip is about Netflix. Let's listen. Now that we're talking about Netflix, let's talk about Netflix. This is a pivotal moment for the content industry. This is great. It popped up right there. All right, let's listen to this.
What do you think? We've had a lot of debate about what's really happening in Netflix. Obviously, the shares are up, but really sort of the performance perspective of what the ad piece of this can do for the business or not.
Yeah, it's a pivotal moment for the industry. It's a pivotal moment for Netflix. Netflix has always dragged this industry forward. Whether it was content strategy, whether it was distribution, and now it's advertising. And it was a surprise move for a lot of people that they would bring advertising in. But when you look at the perspective of they were starting to lose subscribers, they had pushed their prices up to probably about the limit they could go on pure subscription. Advertising is the natural next move. This industry has always been supported by subscription and advertising. It's the cable model, and it works because there are a bunch of consumers who have a limit of what they want to pay per month in subscription. The best way to subsidize that is advertising.
So do you think over time, there's not just an ad tier, but even on the higher tiers, you're going to start to see ads?
I think they at Netflix understand that they've got elasticity on the pricing of the high end of their customer base. So they could probably keep pushing that up without ads. And what they're going to learn very quickly, and I think they're probably already seeing it now, and other analysts are seeing it too, is that the economics of how they're driving average revenue per user through advertising is going to be very compelling.
And you think the performance of those ads, the effectiveness of those ads relative to...
This is an important question. He's talking about the performance of those ads. Remember, ads have to be profitable. If the ad doesn't convert, people don't look at Twitter. That's why ads suck on Twitter. Like, this is an important question.
Linear television relative to social media, relative to other advertising platforms is what?
Well, we at EDO, we specialize in measuring the efficacy of advertising on TV. And first of all, TV works. Whether it's live linear, CNBC, or Sunday Night Football.
God bless you for that answer.
It works because it's sight, sound, and motion. It engages the audience. And
okay, so I wanted you to put in the chat your answer to that question. Does TV work? Who still watches TV, first of all? And second of all, does it work? Look, the reason Andrew Ross Sorkin said thank you, God bless you for that answer, is because CNBC is traditional media and they're on TV. I'm not going to be the contrarian here and say TV doesn't work, because I actually do think the reason TV has survived is because it works in terms of advertising. I've also spoken to a venture capitalist who worked at Comcast who broke down to me a couple months ago about in June why TV does work. So I haven't done as much research on it, but let me know in the chat. Does TV work? Do you still watch TV? Because maybe it does work for some populations.
They're not only engaged with this programming, but they're engaged with the ad breaks. And then when you go to live streaming, like Amazon's Thursday Night Football move, or Netflix, or Peacock, or Hulu, what you see is that it's non-skippable advertising on content that people want to watch. So the ads work. What we see is it changes consumers' behavior. It changes their hearts and minds.
Oh, let's look at this. Okay, so monthly ARPU is $12.84 for the subscription. So look, the ARPU for a user is $20 on zero advertising revenue, which is the top free subscription, ad-free. So they're expecting to get at the lowest level, if someone watches 10 hours of content and they pay $7 a month, Netflix is expecting to get $12 per user. So they're planning to double the ARPU, or to get a little bit less than 40% of the ARPU for a user who has ads, which is not horrible, actually, by the way. It's actually not horrible. Okay, so let's finish this. There's about a minute left in this, and then we'll move on.
And advertisers, marketers know that. They see the results. The outcomes in their business change when they run campaigns on TV.
There's a way to do it where I don't mind it. Yeah.
Right.
That's what's really where you measure elasticity, is what you want to see. 3 minutes is a long time. 45 seconds, when I see the little thing that says I only got 45, I almost like it, because it gives me a little bit of a break from like
to look at your phone and see you.
Or just because the show is, depending on what you're watching, it's like, oh my God, I need to relax.
And what is important and has been missed a bit in the first wave of evolution in streaming has been the contextual relevance of programming and advertising. CNBC has always done this very well. The endemic audience and the endemic advertisers, that's a match, and that's information that people want to know.
Right.
And
it's so interesting how he's talking about endemic advertising, because his argument is like, okay, so why do finance YouTubers get paid the most? By the way, I'm not one of those people that gets paid the most, because I don't put up the views like the Meet Kevins of the world. But the reason is because if Weeble's lifetime average value of a user is like thousands of dollars, because they're going to keep trading on the platform, all that stuff. Robinhood's ARPU is like $63. It went up from 56 in the last quarter from the earnings. Then that means they can spend like $60 to acquire a user, because it'll be profitable long term. So that means that the people making the content in which the advertisement is going to play against have the ability to charge higher rates. That's why CNBC is so profitable, because they charge a lot of money to play ads in their content. Because guess who's watching CNBC? People who have a crap ton of money. You know how I noticed this? You know what hit me first in the face when I realized, oh crap, like in investing, your YouTube channel or anyone that talks about finance will likely attract an audience of people that have money. Therefore, the economic upside is higher. When I raised money for my startup and I did a crowdfund, like in March, when I said, hey guys, I have a startup, by the way, if anyone's interested in learning more about it, potentially investing, let me know. And I got hundreds of people emailing me. Like, not everyone converted, but the fact that people emailed me was because they have some fucking money. Like, because the people who watch this channel, if this was a makeup channel, no one's like emailing you to invest. So I remember the first 25,000K check I got was from a guy. 25,000 to him is like pennies. Like, the dude sent it in 10 minutes because he was like, yeah, I think I really like you. I think you have a good work ethic. And if this works, it'll be really big and I'll get a return. If it doesn't, then yeah, it's whatever. It's just a bet. And I'm just like, holy shit. I want to get to that level in life where I could look at a kid, be like, yeah, I think you've got something here. Here's 25K. Go do something with it. Like, that's when I noticed people watching my channel and just in general watching finance content are people that have more money. And as a result of that, you think about CNBC, the biggest global leader for media. They're going to get a lot of people who have money, and therefore they're going to be able to charge a lot through ads. Let's look at Paramount Global, by the way. Parastock. This is the parent company of CNBC, if I'm not incorrect, because I believe Viacom is now Paramount, which owns NBC. Paramount Plus. By the way, who has Paramount Plus? Does anyone use Paramount Plus? I tried it once. I didn't really like it too much, but let me know if you have Paramount Plus. So this stock is at $18.76 right now. Have never been a big buyer. I think there's a dividend on this bad boy. Yeah, wow, there's a 5% dividend. Yeah, this makes sense. This is not a growth stock. This is a stock that's been around for a while. Let's look at the max. Yeah, look at this bad boy. It's been around since 1990. Viacom, CBS, these are big media companies that have been around for a long time. Peaked at $97 in 20. Wow. Paramount was $97 in 2021. This stock, it should not be this high. It's a value stock. 5% dividend yield. Not bad. I mean, for a 5% divi yield, not horrible. Snowflake at 148. Alibaba, their earnings 3% year-over-year growth. Obviously, Alibaba is also not a big grower. I mean, people are buying Alibaba at 319 in 2020. I remember Alibaba was the next best thing since sliced bread. Charlie Munger loaded up $72 million of it at $160 average price. Now it's at 81. The revenue growth has sufficiently slowed down. Part of it is because of the Chinese government. Part of it is just because, look, it's too big. It's just way too big. Fun fact, Masa-san, the owner of, or the guy who runs the Vision Fund at SoftBank, invested, I think, $20 million into Alibaba back when it was worth like very less. It was worth like maybe 120 million or something at the time. Now it's obviously worth, 215 billion. So made a nice little return as he sold over that time. Amit, how was brushing your teeth in the shower? I actually didn't brush my teeth in the shower today. I forgot. I did not brush my teeth in the shower today. Okay, let's go back to the talking heads. Let's see what else they are talking about as well. The Fed still has a long way to go. Here we go. So we had some bullish news. Now we have some more bearish news on what the Fed is going to have to be able to do.
I think this has all been quite consistent across the way, but it feels like every week or two, the market, at least the equity market and possibly the bond market, there seems to be some kind of head fake where people get super excited about this idea that a pivot is coming. And then you hear these comments and you hear maybe not. What should we be taking away?
Look, I agree. I agree with you completely. I think almost every time I've come on, we've talked about a consistent message from the Fed and equity markets in particular getting ahead of themselves. First point to note is one slightly better inflation reading is not consistent with the clear and convincing evidence that inflation is under control. Secondly, even if the inflation measure that we saw was somewhat better, it still started at the number 7. That's a long way from the 2 that the Fed has been talking about. And the third point already made is there's a long way to go because the labor market, which is I think where they're most focused, is still out of balance. Now they're hoping to be able to achieve a soft landing, but you're hearing more talk about pain, and now recently one of the Fed presidents talking about the possibility of recession. So I think they've been consistent, and the markets have been overly optimistic, going back to realistic.
Which is why the Fed has a long way to go. It's going to be hard to pivot. Gabe, super chat, 199. Thank you for the super chat, Gabe. Snowflake sucks. Palantir will outperform. Love you, Chris. Look, I tend to agree with Gabe on that. Snowflake is trading 30 times TTM, trailing 12-month revenue. Palantir is trading 10 times TTM. I mean, you talk about something that's overvalued, and I don't know why Chris is in love with the stock, but even if you think they're executing better, why the hell would you buy a stock that's trading that much over a company that we know the technology is better? Maybe their sales aren't that amazing, but That'll get better. First, Felicia says, I recognize Amit's work ethic as my own, so I invested. Shout out to Felicia. I love this person. They've been part of this community for what it feels like years now. So thank you so much, Felicia, for being here. It means the absolute world to me. Amit, if Palantir keeps growing steadily, will there be a time where it moons very fast, or do you see the stock price as more of a steadily growing up once the macros improve as long as they are growing? Okay, so there's two answers to this. My likely scenario is that Palantir will move slowly as the market moves up, which will get us back to the $20 range, hopefully, within the next 18 months, which would be a 300% gain from now, right? And you can't, that's a 300% gain. That's amazing. The problem is most of our freaking averages are in the 20s, which is why it's annoying, but nonetheless, that's the reality of it. When Palantir has the Tesla of data moment is contingent upon if they can put up 60, 70% year-over-year growths, quarter-over-quarter growths. That's what it's contingent upon. So when you think of something like Palantir in 2025, 2026, when it is inevitable that they are the market leader and they're the winner, which is what's happened to Tesla, that's when you see something like Palantir go from maybe $40 to like $100 over the course of 6-7 months. That is very possible. The problem is it's in the software business, it's in the B2B space, and Tesla has a consumer product. Tesla basically had zero competition. Palantir still has competition, even if they don't have competition. So the Tesla of data bull case, it's really hard to imagine it happening the way it happened for Tesla. But if it does happen, I'm not invested in Palantir to get, a measly 2x. I want the 10, 20x on my money. I just think it has to happen gradually, kind of like Salesforce, right? If we go to Salesforce right now, let me open up Webull. I think Palantir is going to be very similar to that unless they are able to really innovate on the product and just make it that much better than everyone else. If you look at the trajectory of Salesforce, so Salesforce, as we see, it started at $2 and it peaked at 311. Now it's at 147. That's about 147x gain from 2005 till 2022. So that's 17 years, 140x gain. Let's say to get a 20x on Salesforce, you would have to invest when it was what? When it was $14, $15, around that time, $20, that would be 10, a little bit below. So around 2005, 2006. If you want a 10x, you want to invest that at 100. So at 100, it was around 29. No, sorry, not 100. At 10 bucks. So that's close to still 2006. So yeah, it took a long time for it. Every time we go back, it takes years. If you invested in 2015, you have a 2x on Salesforce in 7 years. If you invested a long time before that, about 7-8 years prior. So it took about, let's say, call it 12, 13 years for you to get a good 10, 12x on Salesforce. Palantir just went public 2 years ago. So if you've, and the price it's at right now is the price it went public at. So if we expect the price to go from $8 to $100, which is a good 10, 12x, it might take until 2030. And I'm okay with that because it takes time to build wealth. The question is, do you have the conviction to wait that long? And are you going to be able to build up a portfolio size that is the magnitude to be able to get a good return when it gets to it at 10x over that time? So that's what we're going to see. Bro, Palantir isn't even going to break 5 billion by 2025. Well, yeah, that's why I said it's going to grow very gradually. That's why it wouldn't surprise me if the stock price was $20 in 2025. Still a 300% gain from now. The thing is, if they figure out how to really grow, and again, this is the hard part. I don't suspect it's going to happen in the next couple of years. I think it's going to take time. Then we could see that momentum. But we're going to see. We are going to have to see. Ultimately, we literally, this is what we're going to have to see. Salesforce has more in common with Snow than, that's my point. Salesforce has more in common with Snow. That's why the returns have been rather not that good unless you invested in 2005. Palantir actually is differentiated from a Snowflake and a Salesforce, which is why I hope they don't have the trajectory of Salesforce, but I think the tech is differentiated, which is why there's such a bigger bull case for a company like Palantir. I have more time than money. Yeah, I agree. That's what I'm saying. Guys, if you're invested in the market for the next 15 years, 2020 made us feel like we need a 300% gain in the next 2 days. That is unnatural. Like, it's really important for people to understand that, including myself. I am a victim here as well. When my NEO stock went from $3 to $60 in 3 months, by the way, I sold it at $6 like an idiot because I didn't know what was going on. Goodness, a 20x in 3 months, that's not natural. That's when you have $7 trillion of liquidity and stimulus pumped into the market that's not supposed to be there. So I think it's important to understand that a lot of this stuff wasn't natural and that we're getting back to normal. And then as a result of that, we gotta deal with it. And so if we have to wait 10 years to get the 10x, that's okay. Because we all should have 10 years. And we should be able to hopefully wait that long to get that much money. Any thoughts on when SoFi will hit old times lows, highs? I have no idea. I mean, honestly, SoFi is in the same position as Palantir. Now, their growth is very impressive. I mean, that third quarter was amazing. If they can keep replicating that, which they're not going to be able to do every quarter, but if they can, it'll be amazing. But it's in the same position. 5 to 10 years. You got to wait. Tell them, Amit, this is the real world and it will happen in your lives at least 4 or 5 times before you die if you live to 80 and under. That's exactly correct. If you're under 30, you've got at least 4 or 5 times of these moments happening until 80. If you're 45, 50, you've got 2 more times of it happening. That's fine. Just got to wait it out. I mean, think about it like this. People work a 9 to 5 for 40 years and then retire on their 401k. And if you invested at least $100 a month or $500, I think the number, let me pull up the number. I saw a tweet about this. If you invested from the age 30 till age 65, or sorry, let me get the right tweet out. I don't want to mess this up. There was a really good tweet. I'm going to find it real quick. You would have $1 million. That's the argument. And so if we can wait that long, then you should be able to wait that long for the 10x on the return. Look, here we go. Age 30. Let me share Sean. Shout out to Sean, by the way. Let me put this on the chat. If you haven't followed Sean, he's a great guy on Twitter. Look at this. Age 30, retirement target 65, starting at 0. If you save $500 a month, which I know is a lot, but it's not the craziest, at an average return of 8%, which is the market, an average inflation of 3%, you will have $1.078 million by the time you're 65 off 30 years. So if we can wait 30 years for 1 million, you could wait 10 years for a really nice 10, 20x, but you've got to be able to wait the time, and there's no reason that time isn't the friend. The goal is not to make money in 2 months. The goal is to do something meaningful and purposeful with your life and invest in the market for the long term so that you're enjoying being alive because you will be dead one day. So it's good to like enjoy the process of living. And then when it's time to cash out, you cash out. But like the goal is not to stare at the portfolio all day and hope it goes up or down, because that will even itself out over time as long as the American economy doesn't collapse. And as long as you're bullish the American economy, then it's okay. But the goal is to actually like enjoy the process of being alive. Now, if you're a trader, that's a little bit different. But if you're an investor, you know that's how it is. Okay, there we go. Boom. I think we're done for the day. First of all, shout out to 300 people being here. Amazing live streams this whole week. We averaged 250 to 300 people every single day, which is a big deal for me. So I thank you guys so much. Means the absolute world. Started the YouTube channel last year. I'm happy you guys have enjoyed the market opens. I'm happy also that, I get to talk about other things in the market open other than Palantir, really give my thoughts on different subjects and people can relate to it. People enjoy it. So yeah, thank you all so much for being part of the market open and appreciating all of my idiosyncrasies, which should have been the word of the day. I have all these words in my head, but idiosyncrasies are my like little stupid things that I do, especially the cowbell. I appreciate all of you enjoying that and being there. Next week, we start Monday. We have about 2 weeks left of November. It is November 18th. It's actually my sister's birthday, so I'm about to go get breakfast with her. But we are going to start the Monday on the 21st, so we will have another 8 days left of trading in the markets in November. I think what I'm looking forward towards next week is seeing, is the Santa Claus rally real? That's the biggest thing I'm looking to see. I'm looking to see how the 2-year and 10-year also further invert. And I'm looking to see if we get some preliminary inflation data that is going to let us know in December 13th if the CPI report is going to be cold or hot, and if that is potentially going to influence a Fed pivot. 95% likely the Fed is not going to pivot. It's going to be another 75 and then maybe another 50. But if inflation's at like 6.8 or something, like something crazy, we might see a Fed pivot. So we are going to see from that. Thank you all for being here. Means the absolute world. Sam says, dude, I can't stop thinking about more mortality. That's a good thing. That's a good thing to think about the nature of your mortality, because that means you want to do something with your life, which forces you to just keep going harder and keep trying. Hello, greetings from Indonesia. Thank you guys so much. All right, everybody. Thank you. Couple more videos coming out today. Daily Cowbell launching in an hour. Thank you so much for the support on that channel. Today was a really good episode with some fun debates. I think you guys will all enjoy it. Tesla under 180. Oh, hold on. For the 280 people that are left, we got to see this real quick. Tesla under 180. Hit under 180. Is it there? I typed in 180 in the ticker instead of Tesla. Ooh. Oh, Tesla's a little attractive at 178. All right. Follow me on Twitter, so I'll let you know if I buy. I have some money in my SoFi account that I'm not using. That's just money there. If I buy Tesla, you guys will know on Twitter. So at Amit is investing, you can check it out on Twitter. I'll let you guys know if I get a little bit of Tesla under 180. All right, thank you everybody. Means the world to me. I will see you Monday on the market open. Bye-bye.